shit.
All right, good morning, everyone. Louis Porcelino, Man Over Market, and today is Tuesday, and it's September 22nd. And what don't we have in the news, right? I keep taking my glasses on and off because I don't want to look like I'm older than I am, but I guess I am older than I am, right? So, Volkswagen in the news, Brazilian real, China, you know, global rate strategy. This cracks me up every time they tell me about global rate strategy, right? Okay, what is it? How do we get yield? How do we get more than 0.25% on our money? Well, you know how you do that? You take more risk, right? So you got to go to global, look at the other countries and what they're offering in their interest rate. If that's too risky, look for corporate bonds, AAA bonds, double B bonds, whatever. Just look for other things that are, Apple issued bonds. So I just, it just cracks me up when they talk about global rate strategy, right? When we got the Fed out there, basically said they're not going to come off the zero rate because they have to look at all the effects that's going around globally, right? So I have multiple things to talk to you about. One of the things that let me start with my sharing my charts. Okay, last week we talked about the term naked VPOC. Okay, and how the market. I felt that ultimately, if you can go back to my text, I thought the market was headed to the 1927 area, right? So, let me go down here. So let's move this over. And I'm still getting used to the new software, right? So we made a low here of 1925 half, okay? And when I try to put, I got to put, Anthony, I got to go data series here, right? Correct? Yeah. Let's go back. How many days? I'm going to go back. Let's go back 20. Give us more.
Hit OK.
And hit apply, okay. I hope that didn't screw things up. So sorry, people. All right, here we go. All right, so went back 20 days so I could get some data from the back. Okay, we got a little glitch on the software, and we're working on it. But when you're trying to develop new things that are easy to work on. So we talked about the term naked VPOC. Okay, and so when we look back here, we had one right here at 1933.75. Okay, all right. And now when you look at the low today, all right, we're down here to 1925 half. And then we had this, and if you are following me every day, I said I think ultimately the market has to get back down to the 1927 half area, which we just did. This bottom was unfinished. And then we take a look at these single prints, all right, and we're off over 3,000 points for the day. Okay, so now I'm looking over this way. Let me get this up. All right. So I went too far. I'll get you guys. I'm sorry. It'll get better. All right. So now I'm looking in this area right here, right? Down to these lows. 1919. Okay. And I ultimately think that the market, when you look at it from the day perspective, so we were talking about the notion of naked VPOC and so on. And I thought that ultimately, the market had to get back to 1927. We made a low today of 1925.75. Okay. And this is a great way to use your tools. Like right here, I thought this was unfinished, right? But yesterday, what did they do? They had to go up and run the top before they came back. All right. And I think that we've got a lot of issues going on in the world right now, and the markets are digesting the news post-Fed, right? So when we take a look at today, all right, the top of value, I'm going to put it right here, 1962. Our bull bear zone really is 1962 also, but I put it at 1961 half to 62. All right, point of control from yesterday, 1952 half, value area low, 1951. Okay, so the market is still, if I look at my value right here, our evaluated adjusted price, our VWAP, okay, right up in here, we're still, I'm looking to 1909 down here before we're reaching 2 standard deviations from where we're at right now. Kind of flattened out, right? We're not pointing straight down anymore. Our CSI is below here. It's gone from, when we talk about, if it goes from right here, when I talk, it goes green to gray to red, okay? All right, this is our MACD indicators. And then we stay red, we're gray. All right, we're at red right now. So, when you take a look at the 5-minute pivot, 5-minute pivot is up here, 1938.75. If I click this right here on the software, all right, we can get our 15-minute pivot. Let's get over here, all right? Let me move the chart over a little more, make it a little bigger. So our 15-minute pivot's right at 1951. I'm sorry, right here at 1947.75. It's in a sell also. I click again. I get to our 30-minute pivot. All right. Let's move the chart over. Okay. Move it up. I got to take this down. We don't need all this. Make this right here. All right. Let's move this up. All right. All right. 30-minute pivot. Right at 1953 and a quarter. Okay, so these are these are all telling us that we're in a sell. Okay, but we have the opportunity that that there's markets rarely just go straight down, right? So we're looking for some of a good failure point up on the rally to sell this, unless we can get the markets to change direction. Okay, I'll open this up. Let me go back to our 5-minute pivot right here. Okay, and move the chart over. Okay, and give us, they get a little distorted when we have to move these things over. So I mean, we can move these back. Sorry, but we're working on all the bugs, but for the most part, we're new to NinjaTrader, and we've gotten all our stuff programmed into here, and we're still working on getting all the bugs out of it. All right, so like I said before, top of value 1962, bull bear zone 1961 and a half, point of control 1950. All right, value area low 1951. Okay, I've got all of our sisters in a cell. Let me give you those numbers. Okay, so on the 5-minute basis, all right, I'll bring down the NQ. All right, here's the NASDAQ. Let's bring it over. All right, okay, we've got the 5-minute pivot at 42.75 and a quarter. Okay, so we need to get back up above that to change the short-term trend. So that's the NQ. Put that back over, put it back up on the top here. Let me bring down the Dow. Okay, move the chart over a little, do a little spacing. Here's our Dow right here at 16,248, 16,248. All right, so mark that down, and we get these out back to Twitter. We'll get them back out to you so that these are moving. Right, they're not static numbers; they move with the market. So as you can see, here's the Russell. See how it's stepped down here? Okay, started up here, went into a sell early in the morning, right? Right here, took it out here, and it's been in a sell, and it steps down. And for it to change that trend, it has to get above 1145. Now, these are different than pivots for you new people. These are ours. These are our mom proprietary indicators, which you're going to be able to get on NinjaTrader shortly. All right. Now, here's my chart that I've been starting the day out with everybody and wanted everybody to take a look at this because I've been talking about this consolidation. All right, the 50% range between the 50% off the October lows. So what I did was I drew a Fibonacci number. Right, so here's the highs of 2134, and then here's the lows of October down here at 1813. I drew a Fibonacci, and 50% retracement would be right here around 1974. As you can tell, 74 half. Now this is the first day, all right, that we were making higher lows, and except for yesterday, right? So taking out this low to me is significant. This 1934.75. This is telling me that we can be heading back to the 1900s, 1909, down to back to the 1850 area. All right. So we're talking, I mean, especially if we get through here, this 1915. All right, 1915. I think then we're going to head back down to the 1909 area. All right, we're already down 3,000 points on the day. You got to be careful when you get those kind of moves and the volatility. Our average move now for rotation is basically 5 points. 9 points, right, Anthony? Let's get average rotation.
9.25.
9.25. Okay. So let me take a look. Let's take a look at this. Here's your 20-day, right? We're 20-day 1951 is our 20-day mode. All right, and the value area high is 1976, and then 1913 is the value area low, right? So it would surprise me if we didn't go back here and test this area once again. Okay, so we've been in this consolidation, and now remember, this is a day only. Day only. There is no overnight action in there.
I think you're back.
Hello? I hope I'm back. I don't know what we did here. All right. Let me go back to. Huh? Am I back?
Yeah, you're back.
All right. Stop. All right. So go back to screen share. Okay. So what's the question? The rhythmic data feed?
Yeah, do you need the rhythmic data feed to run those? And the answer is no. You can use any of the data feeds that NinjaTrader offers.
Right. So whatever data feed Ninja offers, you'll be able to run the charts on. Okay. We've got other things that we have to complete before we start going out, and we're like we also have our trader funding program that's going to be started. We're rolling all of it out at once so that you guys can see our trading manual and all our different strategies that we use when it comes to trading these markets. I screwed up today with our charts, and as far as gold, and I put them out earlier, and then I shut down inadvertently, so I don't have all the markets typed in yet. I got to redo these, but in fact, this is and we got to switch this one to oil. I got to change that to the November contract. So, but I put out on Twitter already. I put out some of the things that yeah, I already put out the value area highs, lows, where we're at, and with those things. So as far as bonds, you know, I can't see bonds. Bonds are going back to 160, okay? And anything else that comes out, any other bad news, and the dollar's getting stronger. With the dollar getting stronger, I see gold going down. But at the end of the day, there's so many things that are influencing gold. You know, I don't know who's in control right now. You know, a strong dollar. You know, why own gold? Uh, Zero rate interest. It costs you money to hold gold. But you got global slowdown. Um, you know, ironically, the Chinese markets finished higher yesterday, and we're down off 3,000. DAX is getting killed because of Volkswagen. So it's just a whole, you know, mixed bag of donuts. You know, for the U.S. consumer, right? I mean, nobody wants to see a slowdown, but come on, awesome with gas where it's at, commodity prices where it's at. The only thing that's saving the U.S. and I just, you know, like I said, you know, I make this statement every day, right? I think that we're the cleanest shirt in the dirty laundry. Is that the Fed, with its quantitative easing, has increased the reserves of the major banks because of the fear of too big to fail and bailout. That, you know, we don't have the same conditions that we had in 2008 on our economy being fragile or a bubble. Now, interest rate bubble is a different story. And the Fed, you know, the Fed involved in the markets to me is just, it's funny because I've lived through so many debacles. You know, I lived through the '87 crash. I lived through 2000. I lived through a Mexican peso scandal. I've you know, I lived through the fall of communism. You know, the real estate, housing, all these things, and the government and regulation always comes after the debacle. And it seems like right now, the Fed is doing everything it could do to stop any sort of global meltdown. You know, I don't think anybody has that much money to stop. You know, to be that. Well, let's just put they're very sensitive to what's going on globally, and what they're doing. So, any other questions, Anthony?
They want you to go over the rotations one more time, please.
Okay, rotations. Okay, so when we look at a 5-minute rotation, okay, so what I like, what will happen? Let's just assume for right now, okay, that the low has been put in. Okay, let's say this was the low right here. Okay, which is if I put this in, okay, right here at 1925.75. Okay, so on a 5-minute basis, when the market opens up, I'm looking for average rotation. Right now, the average rotation is what, Ant?
9.00.
9 points. All right. So if I get a calculator out,
it'd be 1934.75.
Okay, so that's the first spot. If the market gets back to 1934.75, that's where I'm starting to look for failure, and I would initiate a short. As you can see, you would be below right here the 5-minute pivot, right? What's the second rotation?
1943.75.
So we could go to rotation up to 1943.75 and get back below this 1938.25, and that'd be your second rotation, and still not take out the 5-minute pivot. The 5-minute pivot will only get taken out if there's a 5-minute close above that, above this point right here. So when we talk about rotations, the market in the summer was at a 275 point rotation. In 5 minutes, it went 275. That's because our market volatility was a measly 1,300 points a day, maybe. Now we're getting 3,000 to 4,000 points, and our 5-minute rotations in volatile markets is now 900 points, right? So I'd be looking for failure at 900 points. Now these dots that you see here, okay, are what we have put in as our exhaustion dots, right? So, you know, and that's when you get, you know, as you can see here, This green line is one standard deviation from the dynamic VWAP, which is this dotted line, which is the value. So as this valuated average price keeps moving down, so does your standard deviation away from it. So right now, pre-market, the market's kind of flattened out, and we're waiting for some sort of movement. So just let's assume this is the low. Look for 900 points. That's where I'd be looking for failure, okay? When I go back and I take a look at that and I put it on, and I move this over, right? And let's assume this is high, right? So 1934 half. Let me see where that puts me here, right? Oh, amazing. Puts me to the overnight mode right here at 1934 half, right? So I'm looking to see how the market will react back in this area if we get another failure once the market opens up at 8:30. So hopefully, is that clear? All right. All right. So I'm gonna stop screen sharing, go back to my mug, and then we'll talk about the rest of the day. So look, I think that the market, I'm not scared about the volatility. I love the volatility, and I don't even have any fear that I think that this is the end and the market is melting. I think that what's happening is that the market trades on a couple different things, right? So we've been waiting for for about 3 weeks or 2 weeks that the Fed kind of paralyzed us, and now there's been some bad news, and we got the Pope here. The Pope's here. That's a good thing, I guess. All right, and also we've got the Chinese president here. So and I think that both Obama and the Chinese president are going to be talking a lot about the global effect of both of these countries. And so I think that what we're seeing, and this has always been, if you're a technical analysis guy, is it news that drives the market, or is the market actually really going there because that's where it should go, right? So when I take a look at consolidation moves, I think if the market's going to be strong, the more time we put in an areas between 1850 and 1900 will be a strong base to keep the market and to sustain a rally if we get a rally in the latter part of the year, which we're already in September, but I'm thinking that we're going to get a robust fourth quarter coming into Christmas. A lot of this stuff is going to be the holiday sales, but besides that, all the shakeups are going. This Volkswagen thing, we'll get by that. I mean, it's an issue, but I just think that there's a lot of issues out there that if they ever came to surface, we would all And here's my other warning: the media loves, especially the news media, loves to blow things out of proportion, right? They report the news, but they only report that's very sensational. So keep your cool, stay with us on Twitter. We're going to get this stuff out to you. We're going to have our mentoring program, and hopefully you guys stick with us. All right, everybody, have a good day trading. Talk to you later. Bye.